What's good, guys? Welcome back to The Big Broker. I'm Marlon, and today we have exactly 50 days. 50 days until what could arguably be the most critical financial pivot point of the next decade. Look, if you are a retail investor just buying whatever coin Jim Cramer mentions on TV, go ahead and click off right now. Seriously, this video isn't for you. But if you actually want to understand how institutional money moves and how the algorithm of the crypto market is hard-coded into human psychology, you need to listen very closely today. There is a mathematical pattern, a literal code, that has repeated itself with terrifying accuracy since 2015. It tracks the exact number of days from the absolute bottom of a Bitcoin bear market to the absolute peak of the bull market. And more importantly, it tracks the days from the peak right back down to the bloody bottom. According to this pattern, as of the day I am posting this video, we have exactly 50 days left until the absolute bottom of the Bitcoin market is locked in. But here's the catch, the trap that 90% of retail investors are going to fall into. When a pattern becomes too famous, when everyone on Twitter and Reddit knows the exact date the market is supposed to bottom, the big players change the rules. Today, we are cutting through the noise. We are going to break down the 1064 day code, overlap it with the 2028 halving timeline, and look at the actual on-chain fundamentals to see if the bottom is coming in 50 days or if it's actually happening right now while everyone else is waiting. If you have capital sitting on the sidelines, waiting for the perfect entry, this is the most important data you will look at all year. Let's ride. Let's look at the raw data. No emotion, just math. A highly respected anonymous analyst in the deep crypto community brought this specific sequence to light, and the historical repetition is actually insane. Here's how the cycle breaks down. From the absolute bottom of a crypto winter to the blow-off top of a bull market, it takes approximately 1,064 days. Then, from that euphoric top down to the absolute despair of the next macro bottom, it takes exactly 364 days. Let's backtest it. From the bottom in 2015 to the peak in 2017, 1,064 days. From that 2017 peak down to the brutal 2018 bottom, 364 days. The pattern repeats. From the 2018 bottom to the massive 2021 bull market peak, 1,064 days. From the 2021 peak down to the 2022 FTX crash bottom, 364 days. Now, let's look at our current cycle. From the 2022 bottom up to the peak we saw in October 2025, exactly 1,064 days. If we take that peak from October of last year and add 364 days of downward bleeding price action, it places the ultimate undeniable macro bottom of this current market directly on October 6th. If you calculate from today, that gives us roughly 50 days. If you are just here for a date, there you go, October 6th. You can close the video now, go set your buy limit orders, and I'll catch you later. But if you are still watching, it means you know the market is never that easy. You know that Wall Street doesn't just hand out free money on a predictable calendar schedule. Here's the problem with famous patterns. When everybody expects the exact same thing to happen at the exact same time, the market front runs the event. Let me give you a perfect example from our recent history. Do you remember the Bitcoin spot ETF approvals? For months, every single influencer was screaming, "Wait for the ETF approval. The day it gets approved, we are going to the moon." What actually happened? Smart money bought the rumor months in advance. By the time the actual ETF approval day arrived, the massive green candles had already been printed, and the market actually dumped on retail. It was a classic sell the news event. The same thing happens with the Bitcoin halving. We know the halving happens every 4 years. It's public code. Because everyone knows it's coming, the market historically starts acting bullish before the halving actually triggers. So apply that logic to this 364-day bottom cycle. If every retail trader on the planet is sitting on their stablecoins, waiting for October 6th to deploy their cash, do you really think BlackRock, Fidelity, and the massive crypto whales are going to wait until October 6th to buy? Absolutely not. They are buying the fear right now. They are front-running the 50-day countdown. This brings me to the core question of today's video, and I want you to go down to the comments right now and tell me what you think, because this is where the real money is made or lost. Drop a comment right now. Do you believe the market is still completely organic and driven by retail supply and demand? Or do you think the massive influx of Wall Street institutional money has permanently broken the classic 4-year cycle? Are we being manipulated to wait for a bottom that has already passed? Drop your thesis below. Let's get a real debate going, and I'll be pinning the best, most detailed argument. My personal take, the history is rhyming, but it's shifting slightly, which is why we cannot rely solely on a day counter. We have to look at the on-chain fundamentals. Let's throw out the calendar for a second and look at the point of control, or POC. In volume profile trading, the point of control is the price level where the most volume has been traded over a specific period. It is the absolute center of gravity for an asset. It's where the market agrees on fair value during an accumulation phase. If we look at the charts right now, the macro point of control for Bitcoin in this accumulation zone sits squarely between $50,000 and $74,000. Let me repeat that. Between 50 kilo and 74K. In every single bear market, 2018, 2022, the ultimate bottom was formed exactly at the point of control. We did not fall into the abyss. We consolidated at the highest volume node. Right now, we are dancing inside this exact zone. The absolute worst case scenario, the floor of all floors, is the aggregate mining cost, which currently sits around $47,000 to $48,000 for the most efficient miners. If Bitcoin drops below that, the network literally becomes unprofitable to run for the big mining farms, forcing capitulation. So, whether the bottom is today or in exactly 50 days on October 6th, the price action is likely going to remain tightly coiled in this point of control zone. Furthermore, let's overlap this with the halving cycle. A secondary metric shows that Bitcoin historically finds its absolute macro bottom exactly 500 days before the next halving. If you pull up a halving countdown clock right now for 2028, we are hovering right around that sweet spot. The 500-day countdown aligns almost perfectly with the 364-day cycle. All the indicators, the Sharpe ratio, the power law bands, the point of control, and the time cycles are flashing the exact same signal. We are in the accumulation trench. But here's where it gets highly volatile. We are about to get squeezed. On the weekly time frame, the 200-week moving average is slowly creeping up. At the same time, the macro bull market support band is descending. The price of Bitcoin is getting trapped in a wedge between these two massive technical forces. In the next few months, right around September and October, the market is going to be forced to make a violent decision. In 2022, when we got squeezed like this, the market broke downward, accelerated by the FTX collapse. In previous cycles, it broke upward. So what is your strategy? How do you play this if you have $3,000, $10,000, or $50,000 to deploy? You do not try to catch the exact butt of the fly. You don't try to time the exact dollar of the absolute bottom. That is a fool's errand. What you do is build your base inside the point of control. If we are hovering between $53,000 and $70,000, you are dollar cost averaging into your heavy conviction plays. You secure your Bitcoin, you secure your Ethereum or Solana, and more importantly, you use this boring, sideways, choppy market to build your intellectual capital. You should be in the trenches right now hunting for airdrops. You should be providing liquidity in DeFi pools, earning passive yield on your stablecoins while the market decides what it wants to do. Because let me tell you the math of buying the accumulation phase. If you buy in this formation zone right now at the point of control and you just hold it until the 2028 halving, historical data shows an average gain of 90% to 100% just leading up to the halving. We aren't even talking about the post-halving bull run. Just buying the bottom and waiting for the halving has historically printed massive returns. If you deploy capital at these levels, you are effectively positioning yourself for a conservative doubling of your base wealth before the true mania even begins. Guys, the window of opportunity is not endless. We have 50 days until the supposed mathematical bottom, but smart money is already accumulating. If you are sitting there paralyzed by the red days or waiting for a magical $30,000 Bitcoin that may never come again, you are going to get left behind. Before I sign off, I need you to think about that one buddy of yours who always texts you when Bitcoin is at all-time highs asking, "Hey bro, is it too late to buy?" You know exactly who I'm talking about. Do him a massive favor. Hit the share button right now and text this video to him on WhatsApp or iMessage. Tell him, this is the phase where the money is actually made. Wake up. The algorithm loves when you share, but more importantly, you are going to save your friend from buying the top in 2028. Share it right now. And if you want to stay ahead of the herd, if you want the raw, unfiltered data on how to actually build asymmetric wealth, hit subscribe. We are cutting through the BS every single week on this channel. Make sure you drop your thesis in the comments about Wall Street manipulating the 4-year cycle. I'll be in the comments debating with you guys. I'm Marlon. This is the Baked Broker. Stay sharp, secure your keys, and let's get this money. Peace.